All right, good morning, trade pros. Welcome to our morning market update for Friday, February the 15th of 2019. We got a whole pile of things to talk about today, and it's going to be great fun. I hope you've all enjoyed your Valentine's Day yesterday with your loved ones um, and with yourself. There's nothing wrong with celebrating Valentine's Day with yourself. It's an inclusive holiday, and it's just a holiday to send love, joy, and happiness. I send you love, joy, and happiness. Send you love, joy, and happiness. I send you love, joy, and happiness. Zayla, I send you love, joy, and happiness. I send you all love, joy, and happiness. I hope you guys had a great week so far. It's the last trading day of the week, and we're going to talk about options expiry today. And the big question, will Donald Trump at 10 a.m. today declare a national border security crisis? And how will that impact the stock market? Let's get started today with a morning market fun fact. This is a fun one. On this day in 1966, fund manager Gerald Tsai opened his Manhattan fund, hoping to raise $25 million. Frenzied investors, based on his 49.5% return the year before at Fidelity Capital Fund, fundraised or contributed $247 million, almost 10 times what he was looking to initiate his capital with. In 1967, the year after, the fund did 39.4%. And in 1974, the fund lost 76.3%. So, there's bubbles of all sorts. And whenever you're following one person like that and give your capital to them, you're assuming a lot of risk. I think the only person in this entire universe that cares about your money as much as you do is you. All right. So this is an example of the opportunity to manage your own funds, to manage your own money. It's a little bit of work. It requires some knowledge and a little bit of commitment, but heck, you're going to make investment decisions that are right for you because it's your capital. All right. Coming from a background of trading in an industry, I could tell you that the models that they use are automated, and it's kind of like the Ford line, a production line. It's just done, 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 and there isn't as much time and energy put into your investments as you would. So, anywho, I thought I'd share that with you. It's a pretty interesting fact. This Sunday at 3 p.m. Eastern, Sunday, February the 17th, coming up, we're going to have a live Q&A session. I'm going to make myself available to answer all of your questions that you have on YouTube. Yesterday, we posted a link, and that link was for a video that started at 3 p.m. on Valentine's Day. And that was a mistake, so I apologize about that. But the real session is going to happen Sunday at 3 p.m. Eastern. There's a new link in the description. Be sure to save that one. I'm going to send a notification when it starts, 10 minutes before it starts on Sunday. But just pencil in some time if you want to attend and ask me some questions, because I'm going to answer all and any questions openly, transparently, and in full, and every single one that comes in. Last time I ran for an hour. This time it'll run for as long as questions come in. All right. Let's have a quick little overview of the markets this morning. Japan's down 1.1%. Hong Kong's down 2%. China's down 1.4%. India's down 0.2%. Asian markets got rocked pretty hard overnight. We'll talk about why in a moment. In Europe at midday, London's up 0.4, Paris is up 1.1, Frankfurt's up a whole percentage point. Futures in the U.S., Dow's up 0.2, so is S&P, and so too is the NASDAQ, or so three is the NASDAQ, really. There's three markets that were pretty flat after yesterday's volatility trading. We got volatile yesterday. We had a lot of news events that we were able to capture for the most part in the trading room. All right. As soon as the news dropped yesterday, and it was bearish news, we had quite a bit of a sell stop run. And right on top of that sell stop run, we told the room literally 2 minutes before, hey, look, this is getting a little bit late to buy. We had a chance to buy the open. We had a target. We were a point away from the target. So it's getting a little bit late to buy and early to sell. And literally a minute after that, the market dropped 15 points in the span of minutes. And even though we couldn't catch the short because it was news driven, we sure as heck were able to avoid getting long in an area that presented no opportunity. All right. It's not about getting a trade. It's about finding the right trade that's risk adjusted with the highest opportunity and the lowest risk. That's what we specialize at. All right. We specialize at making you guys trade pros. I'm not going to give you a system, a strategy, or something and promise you a Ferrari by tomorrow morning. I'm going to give you the tools that professional traders use to earn a consistent and profitable income. All right. Anywho, crude oil is up 1.3% today. Gold's up 0.6%. Bitcoin's up 0.8%. Still hovering around these mid 3,000s. 10-year Treasury yield is flat at the day's open. We had a few key economic updates come in this morning. U.S. February Empire Manufacturing came out at 8.8 versus 7 expected. That's a strong number, pretty big beat. New orders were up, shipments were up big. Prices paid were lower, which is great. That's actually a positive thing. Employment was lower, which isn't good. So the employment is the only thing in the Empire's manufacturing survey that was lower, but everything else is a beat across the board. So that's optimistic there. Import and export prices for January came in a little bit more negative than expected. Export prices were the big kind of drop. Import prices also dropped quite a bit. So that's a morning update there. 9:15. Hey, somebody just texted me. I don't know who it is. 9:15, we have industrial production. So 15 minutes after, or in 8 minutes from now, that's coming out. 9:55, Fed's Bostic is speaking on workforce development. 10 a.m., we have consumer confidence. 1 p.m., we have Baker Hughes, which is a really important indicator out of the United States, which shows you offshore drilling, which is a supply side indicator, which is important because U.S. is the biggest exporter, or producer rather, of crude oil. They're not the biggest exporter. They consume it domestically, but they produce the most out of every other nation. All right. Today is also options expiry day. So I'm going to tell you this. It's a Friday. It's options expiry. Your goal is to get green before around noon Eastern and maybe a little bit of the afternoon session. But as we get closer to the closing bell, you're going to see a lot more volatility that doesn't make sense. All right. And the reason being is volatility around options expiry. A lot of traders love it, but only if you're a scalper, because you'll see volatility come in, the markets will move, and you might have your technicals that say it's a support level, and then we drop 10 points. Like, what the heck happened? That's options expiry for you, because what happens is funds are closing out positions and rebalancing and readjusting their portfolios based on their option strategies. Now, you could be long puts, short puts, long calls, short calls, and you don't know what you are, but you're doing ES future trades to offset those positions and roll them forward, or you might bail out of them. So at the end of the day, they're having closing transactions that aren't based on technical or order flow levels. They're just transactions that are going to happen regardless. They're automated, computer-based rebalancing strategies. So be careful towards the close. Around 2:30 to 4 p.m., there's going to be a lot of volatility. And if you have a good day, you shouldn't be at the computer around that time. Most professional traders after 11:30 a.m., which is the European close, are where? At the bar, all right? I'm not saying you have to go to the bar, but I am saying be careful if you're going to stick around into the close. Very few people really do, all right? Even though volume's high, it's not high because people are trading. It's high because funds are rebalancing, all right? Remember that. President Xi has revealed that U.S. and China trade talks will continue in Washington next week. So now we have something to look forward to, some updates, some market volatility. They're hoping to reach a mutually beneficial deal. This comes after we found out yesterday from the Wall Street Journal that there aren't really any significant advancements in the trade talks. All right. And a big question today is, will Donald Trump, what is that popping sound? You guys hear it? Oh, something's popping. Sorry, just threw me up. Wow. I suddenly feel unsafe. If this is my last morning market update, let's make it a good one. Will Donald Trump declare a national emergency today? There's some people expect him to speak at 10 a.m. It's not a confirmed press conference, so it could be a little bit later, a little bit earlier. So today you got to be on the lookout for this news. You got to have an audio squawk, a news service that feeds real time into your trading. We provide that for our members in the trading room. We give them real time news updates. We call it out, and we give the updates as we receive them. That's one of the big benefits of trading with us in the community. Is that number one, you're surrounded by traders who are successful and can help. And number two is we give you live news as they hit the wire, which is very important, and analysis on what you should do to take advantage. So we are expecting Donald Trump today to give a conference of some sorts, a live conference, and we expect that to be him declaring a national emergency to secure funding for his border wall. Negotiations aren't going that great. He said he read over a 1,500 or 150-page proposal by Democrats. He's asked for clarifications on 4 things, and he's not going to get a response by the deadline of this Friday at midnight. Tonight at midnight, the government shuts down if there's no deal reached. All right, so we're kind of listening to a little bit of that. I think he's going to accept this current proposal to avoid the shutdown, and he's still going to declare the emergency to get the additional funding required. If that happens, markets are going to get volatile, so expect that and be prepared. Last but not least, China's markets are down. Equities are down in China because we had a slowdown in inflation. The Shanghai Composite was down 1.4% based on inflation coming in at just 1.7%. That's very low for China. Consumer prices rose at the weakest pace in a year, up just 0.1% from a year ago. So inflation's really dropped off in China, and that's caused a sell-off in equity markets in all of Asia, right? The contagion theory in Asia. And we're waiting for Donald Trump. We're waiting for Fed's bosses to speak. There's a lot of events, 10 a.m. consumer confidence, and its options expiry. So be cautious, be prepared. And today's day is I'll tell you this, you're going to have to fight today. There's some of those easy days where it's a nice trend. You just short rallies or buy dips. You laugh and high five each other and you all make money. Today ain't going to be one of those days. I sense it's going to be a little bit more turbulent and trying of a day. And so in volatility days, what do you do to adjust? This is a surprise to a lot of traders. The more volatility there is, the smaller your positions have to be, because volatility means you get more contracts traded across more price, which actually means every single level or tick is thinner. Therefore, you have to be able to have less contracts. You can't put on a big position at a nice even level. You got to average up across more price. All right, that's the challenge in today's market. I'm going to warn you. It may be a nice, easy session, and I'm seeing some more challenging type of environments that we'll navigate through together. So far, I'm gonna invite you guys in today as well for the first 5 minutes of our trading room update, and I'll give you some more insight there. So let's turn around and let's do this. All right, trade pros in the room. Let's get down to business. I'll show you the S&P 500 and give you some analysis for the day. And let me throw YouTube screen share on as well. We'll invite our YouTube family in for this one. Screen share. All right, YouTube, you should be kind of seeing what the trade room's been seeing those last couple minutes that we're doing this morning market update. Now let's talk about a few things. Number one, I've pulled up Interactive Brokers, and I wanted to show you options expiry. That's one thing I wanted to fill you in on. So let me pull up the window again, because unfortunately I had it up and I closed it. New window. So in Interactive Brokers, on their new window, options tools, options analysis, there is something called option activity, and you are looking for, oh man, this thing, hang on. It is called open interest. In a few seconds, we got January industrial production. Just keep an eye out on that. If you're in a position, be careful. All right, we're looking at open interest by strike. So I'm screen sharing it right now. So if we go ES, futures, March, check off February 19th and 20th because we want the February 15th expiry. Go puts and calls. Here's what we're seeing. Today we have a ton of volume at the 2760 area. Remember that, because where are we right now? 54.75. So we have over 2,500 call options set at 2760, and we have about, what is that? 3,000, almost 2,800 at 2720. So that's your range, 2720 to 2760. If your long calls or long puts, the expiration theory goes like this. On expiry date, it's called max pain theory, and markets will expire at the level which causes the most amount of losses to the most amount of participants at the same time. And that max pain theory is between the 20 and the 60. So 2740 area would be a very losing expiry for a lot of long and put holders. All right, so that's just something you need to look at, and the way you establish that is through using this options open interest activity. Now let's look at the S&P 500, remembering those levels at the 2760. It's no surprise we have somebody looking to sell some S&P 500 contracts. My computer did a Windows update last night, so I don't have any inventory data overnight. You could say it's just blank, and I wish I did, because then we'd have more information. If somebody was running it, I'd appreciate it if they could post it in the team room so we could have a look. All right, so far though, this morning inventory is accumulating to the upside. You got a lot of offers. The pivot point is at 45.67. R1 is 61 even. And so off the open, I could see is dropping down to these low 50s to find some support. This is point of control. a lot of consolidation, and pull back to the 50, 51 area, and then we take a shot at 61. I don't see it as a high odds move to just go straight through the 61. And if we do, we'd have a fading opportunity as we wait for Donald Trump news to come in and consumer sentiment. All right. So long near the low 50s is where I'm going to be looking to plan a trade, and then low 60s around the R1 to do a fade if volume starts to turn. If we get up here and we look super bullish, I ain't fading nothing. I'm going to actually look to buy it. Okay. Those are your levels: 61, 51, and whichever one comes first, that'll be the first trading opportunity. And of course, we got to qualify that in real time. So I'm going to pass it over to Steven, to our oil desk, to give us a little bit of update on oil. And Vicky, you want to do NASDAQ today? And then we'll go to Victoria to talk about NASDAQ. And then we'll quickly go to Mark as well to talk about the Dow. So that's it for you guys on YouTube. Take care. Have yourself a great weekend. I'll see you on Sunday at 3 p.m. Eastern. Now back to the trading room.